Hey, it's Mike, and today's stock of the day is Simon Property Group. It trades on the NYC on symbol SPG. The stock was up a little over 1.33%, up to $115.39. The 52-week high on Simon Property Group is 121.92, so it is close to its 52-week high. Look at the 1 month. Stock has been kind of trading sideways. However, if you begin to pull back over the last 6 months, you can see this stock has nearly doubled, which is kind of incredible for a company that pays a 4.5% dividend yield. Simon Property Group is one of the great sort of recovery plays as people begin to get out of the house and begin to become more mobile as the pandemic begins to subside here. And so, who is Simon Property Group? Simon Property Group is the largest retail real estate, one of the largest retail real estate investment trusts that focuses primarily on malls. So, chances are there is a mall owned by Simon Property Group in your neighborhood. They have malls everywhere. So let's just take a look at their fourth quarter and full year 2020 results. They generated over $2.3 billion in operating cash flow. They acquired an 80% interest in the Tubman Realty Group. They made strategic investments. They raised over $13 billion in the debt and equity markets. Let's go ahead and take a look at the results from the year. They had net income to stockholders a little over $1.1 billion, or 3.59 per diluted share. Right now, they have a PE ratio of about 32, which is actually really good in this market environment. Also, Simon Property Group said that over 90% of their tenants are paying, which is really important right now because they are a mall, and we've heard about retail having a challenge. You're seeing a lot of foot traffic coming into Simon Property Group, which is really important, which is kind of why this stock has been doing really well over the past 6 months. And I think that trend is going to continue as kids get out of school, probably about 6 or 7 weeks. A lot of them are going to go to the mall, and that's going to generate a lot of foot traffic. I think that's going to, a lot of movie theaters are opening, and you have a lot of anchor tenants as movie theaters at Simon Property Group malls. So you take that, and they take the fact the P ratio is respectable. It's paying a dividend yield of 4.5%. This is more than double what you get from the 10-year or from the average S&P dividend. And this is a stock that I think will outperform. In fact, we're seeing a lot of large dividend stocks beginning to outperform. So I'm starting to focus on these big paying dividend stocks. It's also close to its 52-week high. And as you already know, stocks that hit their 52-week high or get close to it get a lot of interest, especially from institutional buyers. Let's just go over real quick for their results for the year. Their portfolio net operating income for 2020 declined 17%, which is bad, but considering it was a pandemic year, probably not that horrible. The results for the quarter, net income attributed to common stockholders, $271.5 million, or 86 cents per diluted share. That's pretty good. Occupancy here was 91.3% on December 31st, 2020. So over 90% occupancy on the mall. Considering this was during 2020, that's a great sign. The occupancy will probably go up even higher in 2021. So when you factor all of these things in, you get a company that's really well set up to have a great summer, especially because I think not all stocks are going to rise during the summer. It has to be more of a stock picker's market. You have to be more selective. So definitely take a look at Simon Property Group. I'm going to be buying this stock pretty soon as I get more cash in, probably next week. So definitely check it out. Once again, it trades on the NYC on the symbol SPG. Okay, so I hope you enjoyed this video. If you did, please be sure to leave a like and go ahead and subscribe and join notifications. I do multiple daily updates on stock training strategies, and market updates. Thanks a lot.